Welcome back to today's session. We will be studying today how are support and resistance zones drawn. So to construct a support or a resistance zone, simply draw a horizontal line through each significant trough or peak into the future. These lines can be drawn through the respective bars, lows, or Giller 1962 suggests using the bars low, close, or high, because this is what most investors read in the paper. Currently papers are not that common, so use open, high, low, close every part to mark the zones. These lines should also be extended into the past to see if earlier prices has declined or stop at the same price levels. Where these horizontal lines bunch together, sometimes overlapping at the same price level, is support or resistance zone. This zone is usually stronger the more horizontal lines there are within it. In other words, the more times the price level has halted previous advances or supported prices previous declines, the stronger will be the resistance or support in the future, because all previous significant troughs have not likely occur at the exactly the same price level. An area called a zone is constructed between the highest and lowest horizontal line. This signifies or defines the actual support or resistance area clearly. As figure shown in the screen shows how support and resistance lines are drawn. Notice that the line at point 1 just under 4547, this line 4547 was first support line. Points 2, 3 and 4 are also support levels but occur at slightly different price levels. The highest and lowest levels denote the support zone, a price area where declines tends to halt as buyer enter and reverse the downward direction. Points A and B also denote reversal points defining previous resistance levels, and thus a resistance zone where prices can be expected to halt in a rally. If a horizontal line is by itself with no other horizontal line close to it, it is likely an independent support or resistance line. Such lines, unless accompanied by extraordinary volume, usually do not have the same strength in the future that a combination of horizontal lines might have within a zone. In the future, prices will tend to halt at these zones and occasionally at a single line. Prices will often enter the zone but will not break out of the outer horizontal line of the zone. If they do break that level, we have what is called a breakout that has important consequences. A price break above the resistance zone implies that sellers are satiated at that level and buyers are anxious. See the upward breakout in figure at resistance zone in February. So we are talking about this breakout. In this instance, the break left a vacuum of sellers, and buyers, at least at that price, control the stock. If there is another resistance zone at some distance above the current broken zone, prices will generally trade up to that higher zone. Thus, a resistance zone in an advancing market can become a price objective once a lower resistance zone is broken. Resistance zones exist at all horizons, day, week, or even minute to minute. Some traders only trade stocks or futures, especially E-mini futures. Our colleague Madhav also trade E-mini options with this technique. So let's get back to studies. Between these zones, often on an intraday basis, between very short-term support and resistance, the futures and stock traders traded daily market. What we have said about resistance zone is equally applicable to support zones. Horizontal lines at a significant troughs will show the existence of these zones, and extended into the future, they will become zones of support to price decline. In figure 4.9 shown here, for example, the previous resistance zone become a support zone at point X when the correction after the upward breakout halted at the same level. In addition, as time goes on, the importance of past horizontal lines diminish for both support and resistance zones. More recent price reversals are more important as human memory fades quickly. In next session, we will study about how do analysts use trading ranges. Thank you.